Metamask is a cryptocurrency wallet that allows users to exchange and store any Ethereum-based tokens. Users therefore can engage with decentralized applications such as Rarible or Uniswap and transact on those platforms using the tokens they hold in the wallet. Whenever you want to swap a token, you will be presented with a multitude of codes. Since Metamask has access to a great selection of dApps, it can ensure that users will always get the best deal. Metamask itself is developed and maintained by a blockchain technology company, which is known as Consensus. However, given that it is open source based, it also relies on the contribution from its community to improve upon the product. So here is how it works. First, you either download its browser extension or its mobile application. After successfully installing the application, you will be prompted to create a wallet, and this wallet is secured by a secret backup phrase, which is used to backup and restore one's wallet. In order to deposit cash or tokens into the wallet, users can connect their wallet with various centralized exchanges or buy Ether with a debit card or Apple Pay. Apart from everyday citizens, Metamask also offers a wallet for business clients that is dubbed Metamask Institutional. The institutional wallet offers regulatory compliant custody solutions, access to even more dApps. Metamask, which is developed and maintained by a New York City-based Consensus Incorporation, was launched in July 2016. Consensus itself was founded by Joseph Lubin, who graduated from Princeton University with a degree in electrical engineering and computer science in 1987. After multiple stints in tech and finance, amongst others building software for Goldman Sachs or running successful quant hedge fund, he found himself being drawn to the concept of decentralization. In late 2011, he read the famous Bitcoin white paper by Satoshi Nakamoto, which led him to have a proverbial light bulb moment. However, it would take another 2 years until he finally got himself involved. Mutual contacts introduced Lubin to Vitalik Buterin, the then 19-year-old mastermind behind the Ethereum white paper. In January 2014, alongside Vitalik, Anthony DiOrio, Charles Hoskinson, Mihai Elias, Amir Chatrit, they incorporated Ethereum as a Swiss-based company. Months later, in July, the group was able to raise $18 million through an initial coin offering. Lubin himself was rumored to be one of the biggest buyers of Ether during its initial crowdfunding. Unfortunately, disagreements about the future of Ethereum would soon lead to the departure of some of its founding members. While Vitalik wanted Ethereum to remain decentralized, Hoskinson and Lubin believed that Ethereum's future was to serve a commercial purpose. As a result of their disagreement, Lubin has the plan to create an ecosystem of products and businesses around the Ethereum, and this ultimately led to him start the Consensus. Consensus act as a quasi-startup studios that provide technology services to other companies, incorporates and launches Ethereum-based businesses, and even invest in other startups. The company itself would be funded by Lubin's personal wealth, who after acquiring a significant stake in Ethereum is believed to be a multi-billionaire. One of the businesses that came out of Consensus was Metamask, whose development was led by Aaron Davis and Dan Finlay, two seasoned software engineers with stints at companies like Apple. Metamask was ultimately released to the public in July 2016. Back then, the Ethereum ecosystem was still in its infancy, which meant that adoption of the wallet was fairly slow. The first sign of its staying power came in 2017. A worldwide crypto craze led Bitcoin's price to ascend $20,000, while solidifying Ethereum's position as the clear number 2. This was probably best exemplified by the hype around the CryptoKitties, which was an Ethereum-based blockchain game, the game which users could access via their Metamask wallets. The craze around the CryptoKitties was so much that it caused the Ethereum network to significantly slow down. As a result of wider crypto adoption, Metamask managed to record 1 million downloads by March 2018. Unfortunately, the greater adoption also led to increased scrutiny. In February 2019, for instance, the cryptocurrency scammer had inserted a malware into a Play Store app, which secretly extracted users' wallet keys. Talking about Google's Play Store, in July, Metamask finally unveiled a beta version of its mobile application, releasing them for both Android and iOS devices. The launch in Apple's App Store, which traditionally offer much stronger vetting procedures, would also ensure that scammers had a tougher time stealing the sensitive information. Additionally, in many developing nations, users access the internet primarily through their phones, which allowed Metamask to vastly expand its addressable user base. However, in late December 2019, its app was yet again pulled from the Play Store. Luckily, it returned a week later. Despite those minor setbacks, the team continued to plug away with new updates. Over the summer of 2020, which later became the DeFi summer, users began swarming to the platform. By October, Metamask managed to hit inaugural mark of 1 million monthly active users, which was accelerated by increased usage of DeFi protocols like Uniswap, Yan Finance, Curve, and MakerDAO. Metamask further capitalized on the DeFi trend by launching its institutional offering in December, allowing trading firms and other financial organizations to access popular DeFi protocols in a compliant and secure manner. By April 2021, Metamask had already managed to increase its active user base to over 5 million. Most of that growth came from developing countries in Africa, Asia, and South America, with Nigeria and Vietnam leading the pack. The success of Metamask and its other products allowed Consensus to raise a second round of funding worth $65 million. Consensus had previously raised $10 million in July 2019. Yet again, the summer of 2021 ended up being extremely kind to the wallet. Apart from the continuous DeFi boom, it also was able to add users due to the advancement of NFTs, as well as blockchain-based games like Axie Infinity. Within a matter of 4 months, Metamask managed to grow from 5 million to over 10 million monthly active users. Even ongoing and ever more creating phishing attempts weren't able to stop it from growing. As a result, in November, Consensus was able to raise yet another round of funding. This time, investors poured in a combined of $200 million into its parent company. Metamask is now the leading Ethereum-based wallet, with more than 21 million users worldwide. So how does Metamask make money? Metamask makes money from swapping fees, management fees, as well as by selling merchandise via its online store. So let's take a closer look. The majority of the revenue that Metamask generates comes from the swapping fees. Launched in October 2020, the feature allows users to compare and swap tokens directly within the Metamask. Metamask ensures that its users always have access to the greatest possible selection of tokens, which ultimately minimizes prices and gas fees. Furthermore, rates can sometimes swing within a matter of seconds, thus resulting in big swings between the time an order is placed and confirmed. Metamask allows users to set a maximum slippage, which will automatically cancel an order if it exceeds a certain range. Metamask charges a service fees that range between 0.3% to 0.875% for its swappings. The fee itself is automatically baked into the quota of a trade, which also include gas fees. Apart from its swapping fees, Metamask also makes money from Metamask Institutional, its wallet aimed specifically at trading firms and other financial organizations. The institutional wallet offers much of the same functionality as the regular one. However, it provides institutions with access to qualified custodians while ensuring compliance with the tax laws. It also provides a dashboard for crypto assets and such wallets which can be used to sign transactions with multiple people. Custodians include platforms like BitGo, Credo, and Cactus Custody. Not much else is being publicized about the product. However, it can be assumed that Metamask does already derive revenue from the product. Much like other custodian products such as Coinbase Custody, a management fee is being levied upon the firms it works together with. Fees are probably charged on a monthly basis. Lastly, Metamask also generates a little bit of revenue by selling branded merchandise via its online store. Users, which include both men and women, can purchase a variety of items, including t-shirts, hoodies, caps, mugs, and more. Apart from providing them with another source of revenue, the merchandise also acts as a branding channel for whoever uses or wears the items. Furthermore, brand advocates have a way of expressing their conviction about the product and the ecosystem. According to Crunchbase Consensus, the company behind the Metamask has raised a total of $275 million in 4 rounds of funding. Notable investors include MasterCard, JP Morgan Chase, UBS, MakerDAO, Coinbase Ventures, HSBC, Third Point Ventures, and many others. Consensus is currently being valued at $3.2 billion after raising $200 million in Series A funding in November 2021. From the date of its launch, Metamask has earned more than $409 million. So this was the business model of Metamask. I hope you loved the video. If you have any question, you can ask in the comment section. And don't forget to subscribe the channel for many upcoming business model about the popular crypto companies. See you in the next video.